Good morning, everybody, and welcome to today's Traders Mindchat show, where we look to the past to help us navigate the future. Let's jump right into things and get into today's presentation about studying the past to help us predict the future. Now, why should you study the past when it comes to the market, right? Well, we're interested in the here and the now. Well, what could studying the past possibly help us with? Studying the past is going to give us a variety of building blocks. There's many elements to the market, the fundamentals, the technicals, all these things. The things that don't change no matter what, is human psychology. Human psychology is what drives markets higher. It's what drives markets lower. What drove the markets back during the tulip bulb craze is the same thing that's driving markets now. And that's how we're going to see patterns develop over and over again. And you'll see that in the charts very, very soon. But in a nutshell, analyzing historical market trends is crucial for traders at all levels, whether you're starting out, whether you are advanced, and it helps us to identify patterns and themes that could signal future movements. If you're new to this, type into the chat. Let me know. I want to hear and see where you guys are at. If you've done some historical analysis too, type that in too. Let me know. We'll get a good gauge of where you guys are. But let's start off with some historical context. It seems like yesterday, but the pandemic actually was now 4 years ago, right? It started in 2020. Crazy. But uh, COVID reshaped markets quite a bit. When COVID hit, there were a number of industries that benefit tremendously. And if you were aware of them, we could have hopped along for the ride. And understanding how these shifts can help guide us and see trends, spot things, not just spot the overarching theme, but to also spot the chart patterns as well. So let's take a look at a few of these, right? So here are some of the 2020 market standouts as far as health and fitness and biotech went. These are some of the bigger names that broke out that we'll take a look at. Peloton, right? Why did Peloton move up and run? And how can we learn for that for the future, right? Well, there's a few different things that happened with Peloton. There was a big surge in demand. All the gyms were closed, so people had to go and a lot of people ordered their product so that way they could work from home. They expanded their product line and their number of subscription service to cater towards that audience. As a result, they had a significant move in price. Same thing with Moderna and with biotech as well. Here are some of the charts, right? So here is Peloton. May of 2020. You can see that it started to break out right here, right as right before though we started to really get into the swing of things here. And then it had this incredible surge between May 2020 and January 2021 to the tune of 360%. Here is Moderna, right? What's the difference with Moderna? Well, Moderna started to break out over here. There, this chart is actually zooming in a little bit. That's a little weird, but um, you could have two things. You can see two things happening here. I'm just going to come over here and so that way we could see those two charts a little bit differently here. Doing some editing on the fly, both for this one here and for this one down here, just to make sure that these charts stay put. All right, so that should hopefully be better. All right, so what happened with COVID? What happened with Moderna? What happened with Moderna was that the first COVID vaccine, right? So this is interesting, and then this shows you that price actually moves before the news comes out, and then is a theme that plays out over and over and over again. You'll start to see the market move before the the news hits, right? So here, December 11th, 2020, first COVID vaccines get released to the public. That's way up here. That's after Moderna makes its 100% plus move. Next up, right? So that's 2020. It breaks out again over here later in June of 21. Breaks out, and what's the next major news event? It runs up about 50%, and then the vaccines start to get mandated. Hey, if we could understand the patterns that are presenting themselves, then we could start to take advantage of, well, what's happening here on the chart, understand the broader theme, right? Like we don't need to wait for anybody to tell us that, oh, there's COVID, or that there's uh, mandates coming, but well, we could have a broader sense of those things happening, and we could take a look at the chart and see, well, what's happening here. So what is happening here? Well, did you notice the pattern forming? Did you notice that VCP, that volatility contraction pattern forming, right? Well, we see this again. This is going to be a recurring theme. You'll see different types of patterns emerging again and again and again throughout history. And it's for that reason that you're able to study the past and learn how to leverage it for the future. So let's say that you missed out on Moderna, right? Well, let's say that you missed out on that one. Well, Nvidia displayed a very similar pattern this year in January. And so far, it's run up to the tune of about 40%. Take a look at this, right? Isn't that a very similar pattern? You have one consolidation, a tighter consolidation, and another consolidation, and that happening over the span of several months. Different theme, right? But it's still a theme playing a role, and the human psychology elements playing a role to form these chart patterns. That's what it is. This is all human psychology on display for us. Price breaks out, runs to the tune of 40% and counting. See a couple of questions coming in here. Let me just skim these quickly. This is from Jawei. Morning, Mike. Could you explain a little bit about how you said two OCO orders? Yeah, I can explain that. We'll do open Q&A at the end. So for right now, and Jawei, I appreciate your questions. You always come with very good questions. But for everybody, as you have questions, I love that this can be very interactive. Type your questions into the chat. Try to keep the questions on what we're discussing right now, right? So if you have a question on NVIDIA, if you have a question on Moderna, if you have a question on general historical analysis, go ahead, type those things into the chat and we'll dive deeper into those. Other questions that are not related, well, we'll have additional time towards the end for open Q&A, right? So let's continue with what we got here. All right, so in general, key takeaways so far. The COVID-19 pandemic reshaped the landscape for health, fitness, and biotech sectors, right? It did a lot more than that, but that's what we've covered so far. Companies adapted to new consumer behaviors, right? So Peloton started to ship all their Peloton bikes. They upgraded their software. They hired more people to do more of that. So people were doing and exercising in their homes. The year itself underscored the critical role of innovation and flexibility in navigating market disruptions. And there's a lot more that we'll see soon, right? But most of all, and this is universal, patterns repeat. Sharp patterns repeat. Human psychology remains the same. And that right there, my friends, is what you can leverage again and again and again and again. Here's some additional leaders that came out of 2020, and you could go back and study these, and they're worth studying so that way you can have a better understanding of the types of things to look for. It's not that, oh well, Zoom became synonymous with video conferencing, so let me go find some more no, it's understanding, well, what was happening at the time. Everybody was locked in their house. These guys came along and offered a solution. Shopify, right? The businesses were getting shut down. You couldn't go to the stores. So people started to build online businesses in droves. That drove up their price. People couldn't go to the stores. So where did they do a lot of their shopping? Not just on Shopify, but also on Amazon. Some more, right? PayPal took advantage of that. DocuSign signed things without having to be there, without having to be in person. All these things can play on a theme. So when you see a larger theme at play, start to think about, well, what other kinds of things might be able to fit into this theme right now? And we'll talk about it in a moment. AI, crypto, those things have been huge. What ways can we take advantage of those things directly or indirectly? But first, it's not just about COVID. That other things can happen too. Geopolitical shifts, right? So remember when the whole Ukraine conflict started, right? That disrupted energy. But when? This thing with the zooming is me off a little bit. Let me fix this again. All right. Well, let's come over to where's the chart over here? It's this one. All right. So put it like that and get this back going again. My apologies. All right, almost there. It did not take. All right. Well, we'll stick with this. So anyhow, you could see that Russia invades Ukraine up here. This is after energy has a 50% surge, right? So there's an intelligence to the market. There's an intelligence there. It Did the market know that Ukraine was going to be invaded? Maybe. Maybe some of the major players knew, right? Like not us at home, but that's why it's so much more important to actually read the market. Let this be your guide. This is the truth right here. This is how price is moving. You didn't need to know that Russia was necessarily going to invade Ukraine and that's going to affect energy prices, but you could have taken advantage of it. You could have taken advantage of it down here. You could have taken advantage of this breakout over here, or even again over here. It's not just about reading the headlines. You can interpret headlines, but also learn how to read the chart. This is the heartbeat of the market. It's the brainwaves of the market. It's the brainwaves into the masses. And once you understand how to read these things and interpret them, you could really, really do well for yourself. And it's not all that hard. But back to the topic at hand, emerging themes right now. So we've got crypto and AI. So Bitcoin has been on the move. We've been talking about it quite a bit, newsletter, in our Discord chat from back here. Well, when is that? That's going back to last year. Started to break out. Uh, had a very nice run. I think that run was about 50%. Consolidated recently. Started to break out again right here. Nice spot to add. Same thing with Ethereum. Same thing with Ethereum Classic. Now, how could you trade these? Let's say that you don't have a Coinbase account, right? Let's say that you're still a little bit skeptical of the space overall. Let's say that, 24-hour market cycle, you're not quite sure how to manage that. You're used to trading stocks. How can you take advantage of something like this? There's one way. One of our members pointed this one out. ARCW. ARCW is the next generation internet ETF, right? Sounds kind of funky, but what does it invest in? One of the things it invests in Bitcoin, it invests in Coinbase, it invests in many of the themes that are related to crypto. So, cousin stock theory, right? Similar to what we were talking about before, playing on a theme. This is a way to play on a theme. This one broke out 2 days ago. There's more to the story. It's not just looking at a particular theme and just looking at stocks. We could expand this even more. We could look at historical charts of the indexes, looking at different bear markets, and this is super helpful to your understanding of the overall broader picture, being able to see where we were in the past to help guide you for the future. This is what helped me level up back in starting really in 2010, and that's after struggling for a decade. I didn't do any of this when I first started out. Once I started to do this kind of work, that's when things started to improve for me. So let's start by taking a look here at the NASDAQ. This is the most recent bear market. The most recent bear market lasted from 2021 until, well, you could make the argument that maybe we started to come out of it last April. Maybe you could make the argument that we're just starting to come out of it now. Either way, the NASDAQ dropped almost 40%. It dropped 37.7%. It's this thing is zooming in for us. It's making it very convenient to read. So, what other bear markets can we observe? Well, there was this one back here. Were you guys actively trading this? If you weren't trading back then, let me know. Type into the chat. Hey, tell me yes or no in the chat. Were you trading back in 2007 or were you not? Were you or were you not? I'm very curious to hear this. Get a good gauge of who's trading and for how long. Most people were not trading back then, but that was a 55% drop on the NASDAQ. Here's the NASDAQ going back to March 2020, dropped 78.4% from March 2020 to its eventual bottom in 2002. Actually, that's a typo. That should be March 2000. My bad. All right. So, aside from that typo there, you can start to see a couple of things. Right? Well, what can you see on these charts? Let me exit this and see if I can get that thing to stop. All right, now it's stable. Good. So, what can you see on this chart? I see a few different things. I see a few different things after these various bear markets have happened, right? So, when the NASDAQ topped back here in March of 2000, not March 2020, it took it 15 years before it finally started to break above those new highs. Okay, fine. You have about an 80% drop. It's going to take a little while. But what happened when price finally got back to those highs? You see that, right? This is a weekly chart. It paused. It actually paused for about a year and a half before it finally continued on onward and upward. What happened in 2007 when the market had bottomed and then price finally got back to the prior highs, right? Like, it came off pretty well off those lows. And then what? Pause for a little bit, right? Where are we now? This is why historical analysis is so important. Look at where we are right now. Well, it came off very strong off the lows. We're almost back to new highs. People are getting pretty bullish right about now. What do you think's likely to happen? What's likely to happen is that we start to consolidate somewhere in or around here. And it's one of the reasons why it's important to, if you're not, if you feel like you're missing the boat, right? There is no missing the boat. There's always the market's always here. The market's not going anywhere. If you miss one trade, there's always going to be another trade. If and only if you don't blow your entire ride, your entire fare to get on that bus, right? So let's say that you have your I haven't ridden the bus in years. I don't know how much it costs anymore. Let's say that costs $5 to ride the bus. Let's say that you were going to catch the bus over here, but you missed it. And now the bus is all the way up here. And you're going to just take all your money and jump right in right over there. Well, guess what? If the market hits resistance like it did back over here and consolidates, or back over here and consolidates, then what's going to happen? You're going to lose your fare and you won't be able to get back on the bus because, well, you blew your account. You want to move incrementally. That's another thing that historical analysis can help us do. Why? Because we could look to the past, see what happened, and while it doesn't predict the future, it does rhyme. Based on what we've seen before, after major bear markets, once price starts to get close to the prior high, it tends to pause for a little bit. Will it happen again? I don't know. But I can look at historical precedent. I can take that into account for how much I'm willing to risk, how much I'm willing to size on new positions where I might start to peel something off. Take all that into account. All right, so how to use the past in today's strategy. I want to give you guys a couple of tools here. Number one, first tool that we've been using, you could use for free. It's TradingView. Uh, there's paid plans, there's free plans. My favorite charting tool is TradingView. I used it on this presentation. Next, believe it or not, ChatGPT. That's a great way to leverage research. And if you're not using ChatGPT or some other version of AI, you need to start. This is more than just fun and games. It can assist heavily with research. It could do so many different things, also related to the market. So, for example, actually used ChatGPT to help do some of the research for this presentation. Here's a small handful of the prompts that I gave it, and it was able to spit back information like this. A lot easier than going back and Googling for these kinds of things. A lot easier than way back in the day having to break out the Encyclopedia Britannica, right? You remember those? You remember the people going door to door trying to sell you the encyclopedias? Well, you have encyclopedia at your fingertips, and it could do the heavier lifting of the research. And these are some of the prompts that I used for today's presentation. So ChatGPT, also free versions available. make use of them. All right, so that is it for the presentation. Let me know what questions you guys have. Type them into the chat. Shy Way, I'll get to yours in a moment. But before I do that, I want to say do not forget to engage with likes. So wherever you are, like, subscribe, leave comments. I want to see the comments. I engage with all the comments. And not only that, if you find value here, it's going to help boost the algorithm to send this out to more people to see. So let's see. Well, what questions have come in? Let's get to Jawei. You were asking about OCO orders for a position. All right. So why do we have two OCO instead of three OCO orders for one position? What's the thinking process? Are you using one static stop or a trailing stop? All right. So a couple of things to unpack in related to these OCO orders. And let's put your question up here, Joey. All right. So with OCO orders, I like to set it up well with two OCO orders. I could set up three. I like the third scale out to be a little bit more dynamic. So that's why I like to do the first two. The first two scale outs for me, right? So what's an OCO order? First of all, right? You might hear a term like that and be like, well, what the heck are they guys talking about? I'm tuning out. Before you do, an OCO order is just a way to place your order with your broker. And it means one cancels the other. So the way that I like to place my orders, I'll place my order to buy a stock, right? Like so today, earlier this morning, I bought Labu, right? That's the ticker's name, LABU. It is a leveraged ETF for biotech. Anyhow, I placed the order to buy the ETF as it crossed above 120.10. At the same time, I also set two OCO orders, right? One cancels the other. So I set the first OCO order to hit at about 5% above my entry. Why 5%? Because I risked about 5%. My stop loss was at 5%, right? So the one cancels the other part is you have the where you're going to sell into strength, and you can also have your stop loss, right? So that way price breaks out and you don't have to think. You don't have to think about pressing the sell order in either direction. I like to set up two of those because I like to also scale out into strength two times. One when I've made one times my risk. The second when I've made about twice my risk, right? Fairly simple. And the other part of your question, Jawei, are you using a static stop and one trailing stop? So the stop that's in for this order, both of them are static. They're just staying put. I will adjust them, right? So every day I'm going back in towards the end of the day and I'm seeing how price moved and did a new support level develop. And if it did, then I'll start to raise my stop. All right. Let's see. Well, what's the next question here? Question from I'm third. Did you always trim the stock that's up 5% and 10%? And if we're coming off of the bear market like this, should we hold the stock a bit longer for a bigger move? It all depends. It really it depends on how the market is evolving. So my initial my initial answer would be yes, that I would be looking to hold for longer. But I wouldn't just hold indiscriminately. I'm monitoring the market every single day. I want to see how the market evolves. Could we break out and have another move like we did back here? So to go back a couple of slides, could we have a move where we start to break out and go on a tear like this, or break out and go on a tear like this after maybe we pause for a little bit? Maybe we end up here. Absolutely. At the same time, risk needs to be managed in real time. We're not trying to predict the future. We're looking to the past to get an idea of what we might expect, but it's not a prediction. So many people have got into trouble by trying to predict that they end up blowing up their accounts. There's a lot of people that thought that the market should have topped out and rolled over and continued to roll over way back here, right? You see where my mouse is right over here? People started to short. Oh, no, the market's going to roll over. Let's short some more. Oh, the market's going to roll over. Let's short some more. Oh, yes. Yes, the market is rolling over. Ha. Now I'm making money back. Uh-oh. Now you back up the highs. This isn't a prediction business. We look to the past as a guide, but we're still actively managing risk and making plans in real time. Let's see. Well, what other questions you guys have? I'll come over here and take a look at Instagram. Good morning, Ravi. Got Instagram people hop in and out, and the comments just. Let's see. Here's a good question. Right? Any advice on how to accurately set a stop loss and take profit on the daily chart? That's from Christopher over on Instagram. Okay, Christopher. So now the way that I would go about setting a stop loss and taking profits based on a daily chart is like this. Here is what I'm looking at for LABU. I draw all over my charts. It looks very noisy. It looks like there's a billion indicators on here. It's really more me drawing levels that are important to me. But let's take those annotations off for a moment and let me talk you through how I go about identifying where am I going to enter and what my stops are going to be. I want to enter above a point of resistance. I saw price consolidating over here, right? So if I drew a straight line across, there's a small area of resistance over here. Now, I don't want to just take this on a daily time frame. I want to see how this looks on other time frames too. So I like to keep multiple chart types open. And you can see over here that price is starting to come up above and make a fresh weekly high over here. I also like to see how price is moving on the intraday charts because as you get narrower and narrower and narrower with our analysis, we could start to see, is there multiple confluences across time frames? And if there are, then that adds to the probabilities of success. And it also helps us keep our risk extremely tight. And that's important too, because if our risk is tight, then we could have many losses and still come out way ahead because the larger gains are able to easily pay for all those little losses. You could be a 50-50 trader and still come out way ahead. And the way that you're able to do that is to have much bigger winners than your losses. So uh, that's how I set the entry. For the stop loss, I'm trying to place my stop below a level of support that's also relevant across time frames, that has a couple of moving averages that are supporting them. And there's a few other indicators that I look at as well, right? Just to flip the annotations back on, you might have noticed that there's an anchored VWAP from over here. There's also some Fibonacci retracement levels. So different advanced tools that I'll use, but these are more like icing on the cake. If I didn't have those and I was just looking at the chart, I'd still be able to do this. Those tools certainly help. That's why I use them, right? I'm not just doing it to kill time. But the most important thing is right here. Price, volume, and that's really the main things. far as setting profit targets, the way that I like to set profit targets are to use those same kind of tools, right? So Fibonacci extensions and those sorts of things, taking a look at historical precedent, like we discussed so much earlier today. When a stock breaks out of a base pattern that's about 5 weeks or so long, the average move is 20 to 25%. So I'll start to see, well, where does 20 to 25% fall on here? And I'll start to look for other structural areas where price might get into trouble. And if it's reasonable to say that, oh, that's a good target, then I'll set that target. But I'm not setting a target to say, oh, I'm only going to sell if it makes it to 20%. No, that would be silly. What I want to do is to factor in how far does price actually go on the trades that I'm in, right? Because if the market is very strong, my trades are going to run a lot further. My trades might run 40%. But if we're in a chop fest like we were the last year before, the bear market, my trades aren't going to run quite as far. And so if I'm holding out for 20%, I might not get there. I need to be taking gains a lot quicker. So how I go about setting where I'm going to sell is dynamic. And we talk about all these things, those are pretty advanced concepts. I talk about them in my book, The Trading Mind Wheel, and we also discuss those in depth inside our private Discord, and we have weekly discussions on these kinds of things. Let's see, well, what other questions are there? Here's a question from I'm Third. Did you do your weekend screening using TradingView 2 or just TradingView for the chart? For my screening, I still like to use MarketSmith, which I just heard is being rebranded as Market Surge for some reason. Well, I guess we'll see what they come up with. If they do come up with something cool, I'll be among the first people to start sharing it with you guys here. But I do like to use MarketSmith for all of my screening. It's very robust. I like the data layout within MarketSmith. I'll use TradingView to mark up charts and to analyze the charts. The charts are a lot easier to manipulate inside of TradingView. Plus, you could make your own variety of customized indicators, which is very, very cool. And with that, looks like we are over time here. So let's wrap things up and share some key highlights with you here before we go. So the key highlights from today: every market has a theme. From years past, present day, AI, crypto-related names, cybersecurity related names, we're starting to see a lot of themes set up. How can you identify which themes are setting up? This is another huge conversation that we have. Well, we've had this conversation in our newsletter a couple of times too. We'll have this conversation again this weekend. So make sure that you're a part of the free newsletter. I'll give you the link in a minute. But by studying historical trends, we can prepare for future movements. History doesn't repeat itself, but it does rhyme. So here is the link for the newsletter. If you're not already on the newsletter, go get it. If you are on the newsletter, share it with somebody. Help spread the word. marawealth.com/newsletter. And of course, make sure that you like and subscribe to the show. And I will see you guys here next time. Take care, everybody. Much love. Peace out.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.